All right, we are live for the Friday edition of the Mike and Mario show. And as always, looking forward to connecting. It's been a minute, but nevertheless, here we are. And since we've last connected, Mario, there's been lots of things unfolding, but we're going to do our best to try to make sense of all this, filter through the noise, and see what's really going on. But before we do that, how are you doing?
I'm well, Mike, and I think what you say at the end of all our shows, peace
Mhm.
is, and also love are the two most important things people should focus on. Because
Yeah.
I feel with what's going on in the world, they're trying to make us, hate and be divided. That's what I think is going out there in the world, unfortunately, and we need to not fall for it.
Right, right. I do agree. The whole divide and conquer, man, between the distractions, in the mainstream media, the narratives they're trying to feed us is like it's hard. I've learned that over the last several weeks, it's hard to really, find the truth in amongst all this. You know what I'm saying? Like we get, these spin off of their versions of what they want us to believe, and all along there's something bigger at play, and it has everything to do with the global debt or global sovereign debt crisis, as I've been calling it for the last couple weeks in particular, just because as you focus on the bond yields, we got just the deficit spending, we have this bogus GDP figures, we have a variety of things. So before we get into all that, I want to make sure we welcome everybody to the live stream. If you're wherever you're tuning in from, definitely hit the thumbs up button, show your support for the channels. And then we're going to go through several headlines, share our 2 cents on it, and then at the end get some Q&A. So make sure you guys share your thoughts, ideas, suggestions, and we'll go from there. But let's kick this live stream off, basically just touching on some of the figures that came out today. And so let me go over here and we'll jump on these real quick. So Mario, I guess from this, you had a chance to dive in. What are some things that stood out to you from these figures today?
Well, the PCE, core PCE, that's the inflation data that the Fed focuses on. And
Hmm.
I mean, if anyone believes that inflation's only rising by 3.4 or 3.7,
Hmm.
there's the old saying, I have a bridge to sell to you. But if you go to the other numbers, the Michigan numbers, that's a survey. It's
Yeah.
not run by the government, that statistic. And you
Hmm.
can see that the general public, they expect inflation to be higher next year.
Yeah.
And it's gone up by 1% since the last survey.
Mhm.
And they expect inflation to be higher as well in 5 years. And consumer expectations have dropped massively from
Hmm.
66 to 59.3.
Hmm.
So you said at the beginning that GDP figures are bogus. Yeah,
Yeah.
they were bogus in terms of showing the health of the real private sector economy. But in terms of GDP, they were real because
Hmm.
the GDP statistic is a Keynesian construct in where big government has to know what the economy is doing, so they know how much to tax and spend.
Yeah.
And of course, GDP looked good because government spending has been so high. As you showed me earlier, the deficit is
Yeah.
like over 6% of GDP.
Yeah, so here's the headline. Of course, I ranted on a little bit last night because I went through this past week. I went through several charts just showing how, throughout this past several months, especially in this year, the government has thrown out so much favorable statistics for themselves. All-time low unemployment, and we have just the job numbers have always been favorable for them. I'm thinking like, they give us this hype news, but then it's always revised, several months down the line. So these GDP figures here, more than likely, come sometime Q1, they're going to say, yeah, it wasn't really that high. It's just whatever they typically do. So I thought this was very interesting because outside of these distractions here, like, everything that's being favorable for them has covered up all the real things happening under the with mainstream, and it's just it's hard to believe this anymore. And of course, Janet Yellen coming out saying that deficit spending is not a part of this is like okay.
Yeah, she said treasury yields and bond yields are going up because the economy is strong, and it's not because the debt increased by 250 billion in one day a few weeks ago, or the deficit is like in the last fiscal year is almost 2 trillion. And you
Yeah.
look at that, we are running the US is running a deficit that equates more with or the recession or a crisis.
Hmm.
And the other thing is, if you look at the U.S. debt clock, and I talked about this morning in my video, the
Hmm.
income tax revenue is actually going down. So, an economy that is doing so well, how come tax revenues are going down? And
Right.
but ever since '08, as you can look here, they've never really been able to get back towards even like 2.5%. Even
Hmm.
I'm going to be balanced here and say even during the previous administration, the deficit to GDP was pretty big there, as you can see.
Yeah.
And they were still in power in 2020. Don't forget. And I know that was the crisis that we had.
Yeah.
So I mean, can you imagine if what's happening? And I think that's the whole thing, like you said as well earlier. The more the system becomes unhinged, the more that debt that they need to keep issuing, and the
Hmm.
more interest rates go up, the more crises we're going to have. So they can blame it on those crises, not on the fact that they've been printing printing money for the last 15 years and keeping interest rates low and spending, deficit spending like there's no tomorrow. We can always blame the latest crisis for it.
Right, right. And just real quick here, I'll read this from Joe Consorti. It says, United States hasn't made more than it spent since 2002. The strongest GDP numbers you're being sold are fueled by even larger fiscal deficits. There is no real growth in the USA. It's a multi-decade debt-fueled bender. So, yeah, the charts don't lie, man. The charts do not lie.
And even the surplus there during the Clinton administration, that was due to a technical tweak. We're not even sure if there was a real surplus because the debt was increasing at the time. So how can you have the debt increasing and a surplus? And I remember before that big crisis in 2001,
Mhm.
President George W. Bush, he'd just been minted as president, and he said, by 2008, we will have paid off the national debt, not the deficit, the national debt. And here we are, uh, I don't know, 22 years later, and we're at 34 trillion almost.
Yeah, and climbing. It's no way out, man. There's no way out. And so we know where this is heading. The unfortunate thing is between now and then, I think this military conflict in the Middle East is going to be a lifeline extender for the economy because at some point, especially with this airstrikes in Syria, I think our government is going to really get on that war path of trying to talk about securing our assets and all types of things like that. And we got the new House Speaker who apparently is in favor of Israel, like it's the funding side of things, and more than likely going to be more currency created, therefore more
Yeah.
debt taken out.
Well, yeah. The only hope I have in Rafi, who's in the war zone, he said
Hmm.
that hopefully the system will collapse before they can start anything. That's the only hope I have. But
Yeah,
if not, the currency is still going to be trashed
yeah.
because they're going to, they'll have a big crisis to justify. The other thing that worries me, this crisis that we have is, is just like a next crisis. We had the 2020, and then we had Ukraine, and now we have this. And
Hmm.
this one, I just feel like it's so divisive, and
Yeah,
it's fracturing the world as well in terms of like the Western world and the BRICS and the global South.
yeah,
It's like very similar,
yeah.
and you listen to different people, different leaders from the West and from the other countries, and they're totally opposed in their
Mhm.
views about what's happening. And
Yeah.
that's why, like you, I'm concerned that this could escalate to a much bigger crisis, but we'll have to see. And as I said, in the meantime, yeah, don't fall for the hate or the division. I
Mhm.
just want people to be happy, and not fight with each other. But they're extremists on both sides,
Yeah.
of the aisle, and I'm not just talking about the countries in the Middle East. So about everywhere around the world, there seems to be. It's really I can feel it.
Right, right. Now, two things I want to mention. You mentioned, Rafi and him being in the war zone and him saying that the collapse might come before. But at this current moment, what exactly would a collapse look like? Because I'm thinking we go to military conflict, all government's going to start funding all this. Therefore, more debt expansion, stock market going to take off, and everything's going to start looking favorable for those assets that have been propped up, the bubble related assets, and then gold and commodities, might more than likely will do well. Is so what would that collapse actually look like would be my thought process, because the way they've been kicking this can down the road is like, okay, bond yields go up or down, I mean, whatever,
Yeah.
life will still go on for all these entities. So like,
The
how would
only,
that collapse play out?
I thought about that, and the only thing I can think of is that the countries that have a 180 opposed view to what's happening in the Middle East, countries like
Mhm,
China, Iran, Turkey, even Erdogan made a speech. I saw it was
mhm,
quite an interesting speech. I'm not defending it or not or going against it. I'm just talking about it. That's what people need to understand. I'm just observing, but
mhm,
I think what would happen if it escalates. A lot of the countries that are opposed to escalation, they want a ceasefire. They have a lot of treasury reserves,
mhm,
and yes, the U.S. could freeze all of it, but before the U.S. could freeze it, they could come out and start selling all their treasuries. I mean,
mhm,
Japan is an outlier because they will go with the West, but China, all the Gulf countries, they have a lot of treasuries because of all the
mhm,
oil they've sold over the years, uh, and that could put a spike up on interest rates, and then the Fed would have to come in and do pivot and start doing QE as an emergency,
mhm.
and that will basically, yeah, it would disrupt the world, though.
Yeah.
And can I think the West still depends on a lot of goods and raw materials from these countries that would
Mhm.
be on the other side. So yeah, I don't know, Mikey, but
Right, yeah.
it's, or maybe something would happen out of left field that would hammer things,
Right,
and
right.
then
Because the common trend is an event, the response, which is more fiat currency creation, and then euphoria takes place in the markets. People get excited. Then another event. So it's like that cyclical nature of things. Like, what really would a collapse look like? Even in the fiat world, like
yeah, I
I
think
would.
the ultimate collapse would be gold and silver going stratospheric, and you not being able to get
Mhm,
any more gold and silver, because even Greenspan said that in times of war, he said in extremis,
mhm,
the only form of payment will be gold. Fiat
mm,
currency during times of, especially a world war, would not be accepted, and
yeah,
that would be the death knell of the dollar. And
right.
the, the question is there still any gold left in Fort Knox?
Right. And so I think that right there to me is my answer that I think that I wanted right there. Gold and silver takes off. Like literally the manipulation and all that future stuff, the comics, all that stuff literally is done away with.
Yeah,
And true price discovery
yeah.
comes to the world where we like, wow, like
And
the numbers start going so high.
maybe you could bring up that story about the LBMA, because I think that might
Yeah, let's get
relate
into that. Let's
to
get
it,
into that.
and I can
Let's
go
get
over
into that.
it for the viewers.
Yeah. So let me bring this up here. So this goes right into what we want to touch on
Yeah,
in line with the gold situation. So this is the blog post from the Bullion Star. Ron
yeah,
Manley put this up here,
yeah.
and it talks about gold. So why have all Chinese banks disappeared from the LBMA gold price auction? Mm,
Yeah, that's the London Bullion Market Association, and yeah, there's some big, the biggest Chinese banks were members of the LBMA, and now they've left the LBMA. Some people argue that they don't need the LBMA anymore because a lot of the
Shanghai Gold
gold
Exchange.
trading is being done in Shanghai.
Hmm.
And the other reason it could be that they know what's coming geopolitically, so they're going home before everything kicks off. And the Bank of China like not the central bank, but there's the Bank of China commercial bank.
Hmm.
One of their big offices in London is just across the road from the Bank of England, and I'm sure they have a lot of gold stored there, and you have to wonder whether they've shipped all that gold back to China, because would they want to leave their gold in London? And from reading about this, the fact that Bank of China and others are not participating in the LBMA anymore, I wouldn't be
Hmm.
surprised if all the Chinese gold from underneath the city of London has gone back to China, because if you're going to have a major conflagration, you want your
Yeah.
goal close to home, because when a war starts, like I think during World War II,
Hmm.
in the early days, the French shipped all their gold reserves from France to Montreal in Canada, because
Yeah.
the Germans were coming. They knew it. So
Yeah, so that's interesting there. And so the fact that like all this is taking place under the surface, but on the surface, I forget they're giving us war, debt, and destruction, everything in between. And earlier you mentioned about the issue we're talking about, the issues in the Middle East. And I was thinking, on one of my rants earlier in the week was, prior to the last since October 7th, ultimately when the Israeli Hamas situation kicked off, backed by the US, funded by the US, promoted by the US. That's where I want to encourage people not to be so much in your feelings about these events, even though I'm sure they touch nerves because you might know
yeah.
people, whatnot.
What do you mean promoted by the U.S. though? I mean,
Not promoted by the U.S., but so the Israeli influence over the U.S. is very strong.
oh
We
yeah,
are supporters of Israel, and
oh
so
yeah,
whatever Israel can really do no wrong. It
oh yeah,
seems.
yeah, yeah.
And so the U.S. is always more so in support of them first before
Oh,
anything else in that
definitely,
region.
definitely, yeah.
So
And
that's what I'm referring to.
the thing
And
is,
so my whole point,
that
say again.
What Rafi said about the dollar collapsing is that if it were to collapse, then Israel would be in trouble, because Israel gets a lot of help from the U.S.
Correct. And so prior to this fall, from we start talking about the whole peace movement, from President Xi doing all his rounds of promoting peace, Saudi Arabia Prince talking about all the peace. So there was a large amount of peace deals being done that did not include the West. And then we were talking about, like, sometime soon something's going to happen because
Yeah,
the West
BRICS,
can't go around
BRICS
promoting all this.
expansion, yeah,
So I'm like, now we have the Eastern Hemisphere with all the peace talks is unraveling right now. And then also we have the West agenda to keep things as is, that unipolar world. And it's all right now colliding in the Middle East. And so how it plays out, who knows? A lot of people say World War III. I'm like, God forbid. Even Jamie Dimon came out saying that his biggest concern is a nuclear event. And I'm like, let's not go there yet. But this is another can kicking mechanism to create more debt to keep the monetary system in play. So not
well,
necessarily
yeah,
focus on your feelings, focus on the numbers. The numbers don't lie. Something has to give,
yeah.
and it focuses on the currency.
And
Yeah.
unfortunately, us as individuals can make we can't really make much difference. All we can do is the only difference we can make is to the people we interact with, to make sure
Hmm.
that we are honest and nice with them, and deal fairly.
Yeah.
And yeah, they really want to ratchet up all the emotions, and unfortunately, they're succeeding. And yeah, it's
The days we're in. But I just want to get that out real quick. But let's get back to this one graph in gold. I thought this was important as well. You sent me this, and it says gold is up 58% versus NASDAQ so far this century. And so that's pretty significant, I would say, because right now the tech sector and the overall overall equities market in the U.S. is on shaky ground, it seems.
yeah,
So this is always encouraging.
yeah. This is from North Star Bad Charts. They do a lot of technical analysis. Yeah,
Hmm.
and it's interesting that I didn't realize that gold was. I know gold is up a lot this century. I didn't realize it was outperforming the Nasdaq. So there you go. And that chart there, up on the top right, on my side, looks
Hmm.
like it's forming a bear flag, like a head and shoulders. Sorry,
Yeah.
big head and shoulder, which is bearish, which would mean yeah, gold could continue to outperform the NASDAQ. And how would that happen? That doesn't necessarily gold will go up massively. It means that the NASDAQ could go down quite a bit,
Hmm.
or
Hmm.
gold could go up and the NASDAQ still go up, but not as fast as gold. But it certainly is an interesting trend line.
Yeah, yeah. And then let me get to this last gold. Let me see if I can find it. Where is it at? Yeah. So this is another chart you sent as well from David Blair. And it says after almost 200% $200 surge in gold prices in 11 trading days, we now have almost a week of profit taking and consolidation. Signs are beginning to show that the next important move for precious metals may well be higher, much, much higher. GDX is closing a volatility today as well. So
Yeah,
uh,
I mean,
something that,
these are all like more for traders, but
yeah.
it's interesting to look at. And yes, I'm sure the bullion banks, I watch the gold market almost the whole day, so to speak. I get up early here in London, and a lot of times gold is quite strong. And then by midday London, when the US starts to come in, and then just before the stock market opens in the US, gold is usually sold off. I mean, if gold only traded in the US, it would still be at a couple of $100, I would say. And there's still some that think that gold is not manipulated.
Right. And so, especially when it comes to silver, just the fact, I was listening to one, I think, with Mike Maloney's video the other day, and they were doing some graphs, and they're talking about out of all the commodities that's listed, silver is the only one who is nowhere near its previous all-time highs, even
Well,
just for inflation. I'm thinking
I,
like, yeah,
I
yeah,
think I was thinking about that. I mean, before we came on, why
yeah.
silver has been like, we've had massive inflation, massive money printing. I think it's because silver will ultimately be the destroyer of the dollar. It will be the
Mhm,
one at the end. It will be silver who will win out, and that's why they have to keep it manipulated so much,
mhm,
because silver is really the money of the general public. I would
yeah,
say gold is a good place to be as well, but it's more wealth preservation. But
yeah.
yeah, I think silver will ultimately yeah, will go outperform gold, and that ratio will probably fall back towards 15 to 1.
Yeah. I heard somebody else. Well, I think it was a video I was watching yesterday. Somebody gave some interesting points about how due to the out of the ground, it's 9 to 10 to 1 or whatever it is out of the ground these days. Who knows? But they threw out the idea of 1 to 1, and I'm like, that's different. But
Yeah,
and again, anything is possible when it's been suppressed so heavily
yeah,
that when it
something. Yeah,
pops, it can pop to historical ratios that we never even imagined. So
yeah,
anyway, oh man. So I'm looking at the chat. I see a lot of thoughts on the current events in the Middle East. A lot of
mm,
opinions, a lot of thoughts.
yeah,
Civil unrest, civil wars. Like it's very very touchy subject. But then again,
yeah,
just don't focus primarily on that. Like don't let that be the focal point of your viewpoints, because they're using this for these events are all used for something. It has to do with the current monetary structure.
yeah.
All right, let's go and get some questions. Or no, we didn't talk much about. Let's just real quick. I figure, the military strike in Syria. I
Oh
think
yeah,
that's something worth mentioning. That's very timely. Just the fact that the U.S. troops are present in a country where we're not wanted or invited, and we happen to bomb people that's attacking us in a country that we're not supposed to even be in. So that's different. But
yeah.
yeah, but 1/3. I heard I saw 1/3 of the U.S. is occupied. 1/3 of Syria, according to this little video clip here. The U.S. occupies the naturally rich resource areas,
That's
and
weird,
so.
isn't it? Because I thought Russia was the country that was invading other countries only.
Oh my goodness.
Yeah,
So will these airstrikes be, because they're clearly trying to lure Iran into this. Like the end goal, I think, has always been Iran, according to what the general shared with us of the U.S.'s or the war states' plan of touching every single Middle East country, every naturally rich, oil rich country. And so the question is, will Iran bite? Will Russia and China bite? How will they respond to this?
Yeah.
Because if it wasn't for Russia, Syria, Assad would have been gone.
Yeah.
So what will the Eastern Hemisphere do now? It's like the U.S.
Yeah.
makes a move, then we wait to see what happens from the East. What are you thinking?
Well, I was listening to Paul from the Sirius report. He was
Hmm.
actually saying that China, and I think it's come out in the news that China has backed Iran. You know, they
Hmm.
said you have to respect Iran. So, yeah, that's what's worrying. You know, Iran is like kind of allied now with Russia and China, and
Hmm.
if Iran is provoked, or the West feels that Iran is, inciting Hezbollah or whatever,
Hmm.
we could see this conflict really spread, and that's the worry.
Yeah. Now I'm thinking like, okay, yeah, not yeah, just like, yeah, a global confrontation of that magnitude will not end well. Like, there's no way of it
No.
ending well whatsoever because there's going to be the bigger fool out of all that. And who's the most desperate, in my opinion, would be the Western
Yeah,
world order and the things that they'll be willing to do is
yeah,
what
yeah.
concerns me rather
Yeah, it's
because it
like
can get
they're
ugly.
trying to retain control of the printing press. Basically,
Hmm.
that's what it is. It's the
Yeah.
printing press that they have, which is the fiat dollar. And it's interesting. I don't know if you saw Gary Newsom visited China the other day. He
Mm.
was. I'm not sure what he's doing there. Is Xi Jinping like blessing him as the candidate for the
Well,
Democrats, or?
I was asking the same question. I'm thinking like I could see there being some type of talk about California because Newsom has basically gutted California and hollowed it
Mm,
out, and so there's a lot of resource, a lot of land available there. There's a lot of suspicion about territory being purchased around U.S. assets by foreign interests. So he could literally be open up California as as a state where you can come on in and invest and do what you got to
yeah.
do. Or I'm sure they're already there, but anyway, he's selling out our country. That's basically what it boils down to, in my opinion. Nothing good comes from that. A governor going to see President Xi. So,
Well, yeah,
um,
the thing is, ever since Nixon closed the gold window, all the deficits and current account deficits, trade deficits, basically that's selling out the country because you and the UK as well. We buy stuff from other countries. They take our debt and they take that and they buy real things here, or
right,
in the
right,
US. So yeah, it's not just Newsom, and I'm not defending him, but it's been the policy ever since Nixon closed the gold window.
right. All right, well, let's get to some questions. We have about about 30 minutes. Let's get to some questions.
Yeah.
So if you guys want to put some thoughts out there, bring a different perspective,
Oh yeah, I
challenger.
saw a comment here from where is it?
It's
Uh,
highlight at Manico64 or at RTD so it'll stand out and we'll jump on it.
yeah, I saw a comment about a domain and all the false flags, and I'm aware of all of that. I forgot who made that comment, and oh yeah, it's Spock 2024. Uh,
Spark
Spock,
2024.
Spock 2024, the
Spark.
main,
Okay.
Liberty, Stark, Cole, and others. Yeah, and I know about all of those. It's just that we need to be really careful what we say on social media.
Hmm.
Basically, the main was the pretext to start the Spanish-American War in 1898,
Hmm.
and there's a U.S. battleship in the Havana harbor, and it sunk. And the newspapers in New York, especially specifically the Hearst newspapers, came out and said that Spain had sunk the Maine, and that was a pretext to start the Spanish-American War. And then you
Hmm.
have the Liberty, that was a U.S. Naval ship that was sunk by the Israelis, I think in 1967, during that 67 war. And,
Yeah.
even Rafi was saying that it took 7 hours for the Israel IDF to react to the attack by Hamas, on October 7th.
Hmm.
So, it's the analogy is like you buy security for your house, you pay a lot a month, and if something happens, the security company comes and tries to defend your house. But in this case, the security company didn't do anything. So there's
Yeah.
that too.
Good point. Good point. Let me see. It's Ty Gordon says the market's fall will be legendary. Has any stock market ever been this significantly inflated?
This synthetically inflated.
Oh,
Uh,
synthetic. Oh, yeah. I'm
yeah.
sorry.
Well, I would say the Japanese stock market bubble in the 80s, that the Nikkei went to almost 40,000, and
Mhm.
I don't think it's even halfway there now. I don't know where the
Yeah.
Nikkei is. That was really inflated. Don't forget the Imperial Palace in Tokyo, the land where it is at the time in the late 80s was valued at more than all the real estate in California.
Mhm.
So that was a huge bubble. But I agree with you that this they've been inflating this for eons, and either will collapse or it will just be a crack up boom and hyperinflate, and
Yeah.
it's crazy.
Yeah, and I'm really gonna lean on the idea that the definition of a collapse will be when they lose control of gold and silver, which are
Yeah,
money. Like
yeah,
when they're not able to manipulate those
yeah,
numbers, then that's when
yeah.
the collapse
Or the
will
other way
explode.
to look at it is when the Dow gold ratio goes to 1 to 1.
Mm,
You be that's it, and it might even go below 1 this time. You might be able to buy more than 1 Dow with an ounce, which has never happened. That would be a
mm.
collapse.
Yeah. Okay. RTD, what odds of ZERP and Burr if the current events don't spark a flight to safety in treasuries? Will the Fed front run their own cuts? Mm. ZERP if the current events don't spark a
Oh,
flight to
I think
safety
he
in
means
treasuries.
ZERP, zero interest rate policy and money
The money
printing.
printer. Yeah. What odds of ZERP and money if the current events don't spark a flight to safety? I'm not, Mario, you understand that? I'm not understanding that one.
Well,
Odds of
I
ZERP.
think basically saying if the current geopolitical
Uh
situation
huh.
doesn't get worse,
Uh huh.
but unfortunately, I think it will, because that will be the pretext for the Fed to come in and do what to save the system. It will be like 2020. They they
Yeah.
brought, they brought like that beer thing, and
Hmm.
they
Hmm.
justified that they had to do lockdowns, and then they had the excuse of to do a lot of money printing and cut rates.
Yeah. Now, so like the flight to safety and treasuries, like I'd imagine at this current moment, the world's viewpoint on that narrative of a
Yeah,
flight to safety and
I don't think
treasuries
there
has
will be a
changed.
yeah.
So
I
yeah,
mean,
I don't see that flight to
the
safety because
flight to
treasuries are no
safety,
longer
yeah,
safe.
I think the flight to safety will be in real things,
Hmm.
gold, silver, hard assets,
Yeah,
commodities. Yeah,
yeah.
because if there were to be a conflagration or a war, major war, yeah, the treasury market would probably be closed, because they would
Mm,
probably try to freeze as much treasuries as possible from their enemies.
yeah.
And I think the Fed it would be like a fixed market. The Fed would just say, oh, 10-year yield won't be able to go above 2.5%. And that
Hmm.
happened during World War II. There
Yeah.
was yield curve control throughout World War
Mhm.
II.
Yeah, and at that
It's
point,
not because it's safe, it's because the government has to keep financing itself.
right.
But the currency won't be worth much.
Right, right, and definitely at that point, the world will recognize that literally the U.S. has become a banana republic.
Yeah.
And speaking of which, let me share that image. Let me where that image
No,
that
no
you.
offense to bananas.
Yeah.
I like bananas.
So speaking of which, I forgot that one clip. This one little image you sent me because the word banana republic stood out. It
Yeah.
stood out there. But what is this? What was this all about? Describe this. The M2
Well,
money supply.
I saw this on LinkedIn as a guy who published these together. It wasn't me, but if you
Hmm.
see that M2 is shrinking the money supply, but
Hmm.
velocity is going up, and he says, velocity is up 10%. and the money supply is down 5. But one of the reasons velocity is going up is because the velocity is GDP divided by money supply.
Mhm.
So if velocity, if the money supply is going down, it means velocity will go up. But he's saying Americans are losing purchasing power, and it's true. Americans are rushing to spend just to keep pace with price increases, rampant fiscal deficits as a substitute for minus 25% in personal savings. So yeah, this could be telling us that we could get major inflation, major currency debasement, and I think he's right.
Yeah, yeah, interesting. Okay, so that was just something because Banana Republic stood out.
Yeah,
Um, Overseas demagogue, it says, "What are your thoughts on the Strategic Stockpile Act and the fact silver isn't on it? Do you think the U.S. Mint is accumulating silver for the Department of Defense? Where is the Mint on the COT report? Others." That's a lot right there, boy. What are your thoughts on the Strategic Stockpile?
yeah.
Go ahead.
I don't
I'm
think
from.
officially. I don't think the Treasury has any silver stockpiles. The only silver they buy is for the mint to mint into coins.
Mhm,
But FASB 56, which is the accounting standards that was put in the books under the Trump administration, allows in times of national, when the country's at war and there's a danger to national security, for the Treasury to basically do accounting off the books.
mhm,
So it's
mhm.
very possible that they could be accumulating silver, but no one knows really because they could be using FASB 56 as an excuse.
Good point. Good one. That was a good one. Does an increasing velocity of money indicate the loss of faith in the dollar?
Just like prior to this decrease in the money supply, money velocity was actually going down. And a lot of people said, oh, that means prices can't go up. So, not necessarily. It's just because the way they calculate money
Mhm,
velocity. And if the
mhm,
money supply is going down, uh, it means that the velocity will be higher because the equation is GDP divided by money supply. And if the money supply is decreasing and
mhm,
GDP is increasing, that number gets bigger, the velocity.
mhm. Yeah.
But yeah, it shows that the government, I think, is government and consumers are borrowing to spend because they know that the value of the dollar is going down. And that's despite the fact that money supply is going down. So,
Mhm. Here's an interesting thought here from Tim. It says Bitcoin is going to appreciate at a faster rate. Gold is going to fail. Eventually, people will sell all their gold and buy Bitcoin. So I have a thought about that. Based upon the fact that all eyes and all the current Wall Street hype is focused on this Bitcoin ETF, I wouldn't be surprised if Bitcoin rallies hard and faster and higher because that is a direct outlet for the inflationary pressures that will come about as they
yeah,
reverse course and start pumping currency into the system.
yeah.
Bitcoin will be a beneficiary, true, because I'm sure they would like that to happen.
Well,
Because on the opposite of that, they don't want to see the system break and that collapse talk that we talked about, where gold takes off. Gold is a signal of the end of fiat.
yeah.
Bitcoin is a lifeline for fiat. So
And
I wouldn't be
Bitcoin,
surprised if that is the case.
I mean, to his comment there, gold will fail. Yeah, I
Which
think
I don't believe that.
I mean, I go. This will never fail. I mean, I could bury it in the ground. Someone could dig it in 1,000 years; it'll still be there. You
Hmm.
can't do the same for Bitcoin. Bitcoin is just an idea, a concept.
Hmm.
It's not
Hmm.
real. And I think even when Larry Fink comes out and says that Bitcoin is the safe haven,
Hmm.
there's something going on,
Hmm.
especially when BlackRock has been buying a lot of GLD, I think, or SLV.
SLV. They
Yeah,
like, was it
so,
Sprott SLV? Like
yeah,
they're the
yeah,
biggest hold. They're
yeah,
one of the biggest holders. Like, why are
yeah.
they running into silver like
I'm
that? So
sorry to say that. I think, yeah, Bitcoin might go up, but it's a ultimately, it's a big distraction. And
mhm.
I mean, people will do well with it, but I think there'll come a day where the powers that be will just flush it down to zero, and a lot of people are going to be left holding the bag.
Yeah.
While with silver, that and gold, they will never go to zero. So
Right.
that's my answer to that comment.
Right. Right. I be that. And I just what I think. Digital asset space is intentionally used as a fiat escape hatch for the hyper. Well, I won't say hyper, but the hyperinflationary policies that's coming. So.
Yeah,
But then again, I think in the end, it's going to be some vulnerabilities. It's going to be some vulnerabilities or some network issues that will really shake confidence drastically down the line. That'd be my thought. He goes another. He says gold is too expensive to hold. It's centralized, and it's centralized, and people can steal it from you. And gold miners keep debasing it by making more gold.
well, there hasn't been a big gold discovery in more than 20 years. So, there is no debasement by gold miners. And the other thing is, gold is not expensive. It's a fiat currency that's becoming worth less and less. And you can always buy, you don't have to buy an ounce of gold. You could use Glint and buy a gram of gold, or even buy a gram of physical gold,
Yeah.
or silver. Silver is still cheap, and I think silver is just the a cousin of gold, so to speak, or the
Right.
son of gold.
Here's another question that says, if the Treasury decides to restart their Treasury buying back program, will that further kick the debt can down the road?
No, I think the buyback is just a way of trying to control the yield curve.
Yeah. Yeah.
So they would, instead of they would issue more 2 years, right, and then buy the 10-year. So the amount of debt would still be the same. They're just trying to keep the cost of the longer end lower. But yeah, it probably will help a little bit, but it's just a gimmick for more financial engineering.
Yeah. What else here? Let me see here. Monaco is gold.
Oh, do you know the thing about the buyback? It's just like let's say you have a lot of debt, and then you just consolidate it and you put it in another credit card that charges you lower. That's what the buyback is all about. Just think of it, the Treasury has a huge credit card bill,
Yeah.
and they want to consolidate that, so they'll just get rid of a lot of their credit cards and put it in a credit card that charges less. That's all it is. The debt is still going to be there.
Yeah. It's like cash back.
Yeah.
Like that
No, they
concept,
won't.
like,
They won't get
the more you spend, the more you get back. It's like, okay, what
They
happened to
won't
just
get.
parking and letting it
I don't
grow?
think they'll get any cash back, but
Oh man. All right. We about 40 minutes, man. A lot of good interaction in the chat, man. Appreciate you guys for sharing your thoughts, and of course throwing out some curveballs to try to catch us off guard there. But we appreciate you. So we're back at it, man. Fridays at noon, and hopefully try to get back on schedule, best as our schedules allow. So if you guys have enjoyed this, hit the thumbs up button. What else we got? The Fed is it? What's next week's Fed meeting?
First of November is the Fed is next week. Yeah.
Okay, yeah. So Fed, we're gonna hear what comes from there.
Yeah, I don't think they'll change any rates or anything, but yeah.
True. So what I see, I think Canada just paused, and so they're on a pausing phase.
ECB as well. They paused yesterday, I think.
Yeah. So now it's like pause, wait and see what damage they've done, and then react to it. But anyway, people, have a great weekend. Get out, enjoy some fresh air. Hug your loved ones. Call a friend you haven't talked to in a while. Check on them and say hello. Just, spread love amongst all this division and destruction out here. Find a way to be a blessing to people. But other than that, that's all I got to say. Any last thoughts, Mario?
P&L.
P&L, peace and love.
Yeah, there was when I grew up in Brazil, there's a Japanese golf club called P&L, and it's no, Peace and Liberty. It's similar.
Peace and Liberty. Fair enough. All right, good people. Enjoy your weekend. See you guys later. Peace.